Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Welcome everybody to the Daily Market Commentary. I am your host, Charlie Fulkerson, and joined by my dad, Chuck Fulkerson. For those new to the channel, please hit that subscribe button down below. You will get the updates as they float by.
Nice job, Charlie. Welcome, everybody. Hope everybody had a great trading day yesterday. We're going to do what we do each and every day, looking at the same 10 to 12 futures markets, identifying potential turning points and breakout trades, and we like to make it simple enough here that a 6-year-old can understand as we talk about our trades. Now, yesterday we didn't have a live daily market commentary because we had a live trading room. And so some of the levels that you're going to see on the chart today came from yesterday's live trading room examples, but some of those haven't met entry yet, and they'll still be available for us to take a look at. Most of them did make entry yesterday, and so we'll review from an educational perspective why they did and what that means. So starting with the S&P. Now, the ES yesterday, we just chopped around, not a whole lot of movement, in the morning, in the early morning. And then we had a huge sell-off to kick off the day. So in the overnight hours, it just kind of chopped, and then a huge sell-off to kick off the day, and then the rest of the day was a whole bunch of meh, not a whole lot happening the rest of the day. So we've actually put in a little bit of sideways price action in the overnight hours, not a whole lot occurring here. I actually think that, this could set up for another potential breakdown going forward, that we could break down below maybe this area here. I don't have the trade set up as of yet, but we will take a look at it in a moment. In the NASDAQ yesterday, we noticed that we were pinching in price a little bit, and so this breakdown was what we talked about in the live trading room. Price came down and hit the price target, and now we've started to rally up. So this is actually where I'm going to look for, if we break down today, a breakdown below 70.93 to me is another opportunity to get short. I'm not sure if we're going to rally all the way back up to the origin of this drop, but if we do rally back up, we may get a bit of a reversal at the origin of this drop, and to get there, you've got to take this whole wide swath, 72.36 by 72.84. So those would be the areas I'm looking at today in the NASDAQ. Thinking of this 70.93 as a floor, and once those floors get punched through, price once it breaks through the floor, always, well, not always, but
it will go down.
That's right. We believe it's going to go down
until it hits another floor.
Till it hits another floor.
And that floor that was broken becomes the new ceiling, and the floor that the trade was bouncing on, that is the floor. The new floor.
Right. We call that support, right? That was support. And support is the same as demand. So we'll talk about that a little bit later. You haven't learned that one yet, buddy. We're getting there. Okay. So next would be the crude oil. So in crude oil, we had, speaking of that floor example, we broke through this blue line. This blue line was acting as our floor, and price fell until it ran into a new floor. And think about a rubber ball. Once it bounces off, once we drop a rubber ball on the floor, which way is it going to bounce, Charlie?
But mostly positively up.
That's right. It's going to bounce up. Now, but look at this. It bounced off the floor once, and it bounced off, and it went this high. The second time that it bounced off the floor, is it going to go as high? What do you think? If you drop a ball on the floor, does it bounce the same height every time, or does it bounce lower each time?
Bounce lower.
Right. So if this is a floor and we've not changed our big picture direction, one of the levels we identified yesterday in the live trading room was to get long down here, but then to get short up here. And that's exactly what happened. We bounced, we came down, we traded a little bit deeper into the zone, and we've bounced up from there again. So I've still got this area up here intact, but I'm not going to want to take another short off this level just in case we get through here. I am, however, going to say that this floor is putting in a decent little base. And if we break below this base, then I'm going to be willing to get short again. Now, if you're long still off of that base, I would lock in some profits. But I'm going to put another floor right there at about 68.52 as a chance to get short if we drop down below that level. So the next area that we're going to do is we're going to talk about gold. So talking about gold, we see that we have that same breakout down there at 1218. And if price breaks down below 1218, where do you think it's going to go, Charlie? What number does it look like?
Wait.
It looks like it's going to go to about 1201. You see that 1201 right there? That 1201 would be our next area where we think that there's a decent floor. Now, there's a couple of areas between here and there. And those couple of areas between here and there where we have a little bit of basing, those do not have, in my mind, as much demand as the level down below because they're kind of in the middle of this thrust higher. Now, interestingly enough, the time of day that they're formed is a pretty good time of day. It's right around market open. But down this one, actually, I like a bit better because it's right around the European market open. So as far as a long, there's a potential, I guess, to take a long if you want to take a breakout long above, some of these highs up in here. It's getting to that point where it might be worth taking a long to run it up to this region. I'm not willing to quite do that yet because, even though we did break above our 4-hour channel, we finally have broken above that 4-hour channel. I'm still not, quite ready to take a long on that bad boy as of yet. So looking at the bonds and our currency markets. So in our bonds, we had a level set up yesterday in the 10-year note. We also found it in the 30-year. Price rallied up into that level, and now it's done a whole lot of meh. Right? I personally don't like a level that when price gets there, it sits there for longer than 6 hours. If I'm taking an hourly chart, if it gets to the level and it's there for more than 6 candles, I typically want to close that thing out. It's not working out my direction. So I'm actually going to get rid of these lines. If you got short on this level, I think it's definitely time to consider at least moving that stop to break even. And looking at what's my next play. And right now, this level that we have way down here was found on the daily chart. But it's not really doing a whole lot. So I'm going to remove that level down below us as we're still just kind of in that chopping phase. A lot of wicks on the daily chart, and that's because we've kind of found this base. So, not a big movement out of this level up here that we found as potential supply, but it is moving just a little bit. In the Aussie, we still have our floor down below. The Aussie, we got a little bit of a confirmation style entry that worked out yesterday. And we talked about moving our stop to break even, and we did. And then price came back down and immediately stopped you out at break even, which is totally okay, right? That's going to happen. And in sideways price markets, that occurs. So I'm not going to add anything new to this level. In the euro, so our level, looking at our euro trade, we had a little bit of this area identified off of a 15-minute chart. Now, this one was what we call a touch and go. So in our touch and go on the euro, price came into the level and then immediately came back down, hit target 1, and then hit target 2. So that one
and
met
went
entry.
Through both of them.
Yeah, it did go through both of them and came back down to our demand area, our buying area that we identified a couple of weeks ago. So this actually worked out for a really nice trade for those of you that were able to catch that 15-minute short. So the 15-minute, by the way, was off this little level here. Price rallied in, hit the 15-minute short, and then immediately hit target 1, then came down and hit target 2. And then it never came back up to our stop. So I'm going to remove all of these lines because these lines are no longer valid, but all of them hit target. And then we came down to the level that was here as of a couple of weeks ago, and this was the area we identified a while back, way back here as a little wick over wick level on the 4-hour chart. Price came into here, and we've started to get a little bit of a move out of it. So if you took the long on this, on the reversal, you've gotten a fairly nice profit. I would say that you've gotten at least a 2-to-1 profit, maybe even a 3-to-1. Maybe it's time to take that stop and lock in some profits. For those of you, by the way, that missed some of those trades, those trades we're doing next week, we've got a free preview week where you have the ability to join our live trading rooms to at least sample them out, see if you like them. So October 21st to the 26th, go to tradersarmy.com to sign up. Canadian dollar level up here. Nothing, nowhere near our level that we have identified from yesterday for potential entry. So we'll wait till price gets up into that region. Great British Pound, Japanese Yen. So taking a look at our pound trade. So in the pound, we identified a potential breakout or potential reversal trade on a confirmation style entry. This is why we do confirmation style entries. Look at this. Price came down in, blew right through the level, which means no entry. and no entry is a good entry in this case. So I'm going to remove that level because we didn't. There's no reason to enter the trade. When I look at it on the 4-hour chart, we're sitting at an area where we could get a breakdown from. And so what I'm going to do now is identify this line here as a potential breakout short. So just below here would be a potential breakout short because this is acting as our floor. And like Charlie taught us earlier, when price goes below the floor, it's going to keep falling
until it hits a new floor.
That's right. Same thing that if it hits a ceiling, right? If it hits a ceiling, it's going to keep rising until it hits the new
ceiling.
That's right. Our copper level med entry, very nice move out of our copper level. Now's the time to take your stop in copper. Move it up to underneath 7506, right underneath this big move here. I feel like this level has been used up and is no longer valid. So if you took that copper trade, good on you. Japanese yen, our floor level is still down below us in that area. So as far as this weekend, I am not, I've been very cautious about holding things over the weekend. I will tell you, I would probably be more comfortable holding a short over the weekend than I would a long. So if it's in your trading plan to hold a short or hold something over the weekend, make sure that you understand the risks that are involved with that. I look forward to seeing all of you on Sunday evening for our swing trading room. Like I said, it's a free preview week, so go to tradersarmy.com to sign up, see if you'd like to get a chance to join us. And until the weekend edition, we'll see you Sunday. Say bye to everybody, Charlie.
Bye. And once again, for you new to the channel, make sure to hit that subscribe button down below.